So today we are going to discussing about few information regarding the IFRS Foundation and ISAB Unit 1. So here we can see that one, what you should know the end of this class in the sense IFRS Foundation, ISAB and its membership, qualification of ISAB and members, IFRS interpretation and committees. So here basically we are dealing with this information, that is conceptual framework for financial reporting, qualitative characteristics of useful financial information, elements of financial statements, and recognition and measurement and presentation and disclosure. These are the informations today we are going to discussing in this particular class. The IFRS Foundation is a legal entity under which the International Accounting Standards Board (ISA) operates. The foundation is formed by a board of 22 trustees. The supervisory body for the board is responsible for governance issued and ensuring each body is properly funded. So objectives of IFRS Foundation is the objectives of the IFRS Foundation include developing a set of global accounting standards of high quality which are understandable and enforceable. Second one, promoting the use of application of these standards. And then third one, bringing about the convergence of national and international accounting standards. While moving to the next slide, so what are IFRS? IFRS is a set of international accounting standards stating how particular types of transactions and other events should be reported in the financial statements. They are guidelines and rules set by ISAB. And the next slide, what is the ISAB? The International Accounting Standards Board. That is ISAB, the independent accounting standard setting body of the IFRS Foundation. The ISAB was founded on April 1st, 2001 as the successor of the International Accounting Standards Committee. It is responsible for developing international financial reporting standards, IFRS standards, previously known as International Accounting Standards, that is IAS, and promoting the use of application these standards. Then next one, qualifications of ISAB members are board members are responsible for the development and publication of IFRS standards. Then board is also responsible for approving the interpretation of IFRS standards, developing the IFRS also. Members are appointed by the trustees of the IFRS Foundation through an open and rigorous process. This includes advertising vacancies and consulting relevant organization. From 2000, the ISAB companies comprises 14 members appointed by the trustee. The foremost qualification for the membership of the board is technical expertise. The IFRS Interpretations Committee issues rapid guidance on accounting matters where divergent interpretations of IFRS standards have arisen. They must be approved by the board. The effect addresses issues on responsibly widespread importance rather than the issue for the concern to all small minority entities. The newly identified financial reporting issue not specifically deal with the IFRS standards or issues where the unsatisfactory, conflicting interpretation and development seems likely to develop the absence of authoritative guidance with the view of reaching consequences on the appropriate treatment. While moving to the next one, there are two main approaches to accounting and a principle based on conceptual framework approach, such as the board, a rules-based approach such as that used on the US. So conceptual framework, we can see here a set of theoretical principles, concepts, and the preparation and the presentations. While coming to the next one, the purpose of the framework is to be, there is the 3 points are there here, you can see, the assist in international accounting standards, board to develop the IFRS standards. These are the boards are the consistent concepts. Assist prepares to develop the consistent accounting policies when the no standards applies to a particular transactions or the event or when the standard allows the choice accounting policies. Assist all parties to understand and interpret the standards. So next one, objectives of financial reporting. The objective of financial reporting provide financial information about reporting entity useful to the investors, lenders, and creditors and decision making to the resources to the entity. So elements, so now coming to the next one, the elements are the building the blocks of financial statements, statements of financial position report, assets, liability, and equity, statements of financial performance report, incomes and expenses of the particular company. So while moving to the next point, there is recognition. Items are recognized in the financial statements if they meet the definition of one of the elements. However, not all items meeting these definitions are recognized. Elements are recognized if recognition provides user with useful financial information. So financial information in the sense, the company profit and loss account, balance sheet, trading and loss account. These are the fruitful information should be given to the stakeholders of the company, creditors of the company, and some other part of the company members also. The relevant information, a faithful representation of assets, liability, resulting income, and expenses. By coming to the recognition, the recognition is the removal of some of all assets and liability from the statement of financial position, which are those losses, control of the assets, or as not present obligations of the liability. Accounting for declaration should be faithful represent the changes in the net asset well as assets liability retained. While moving to the next slide, the measurement. When recognized the financial statement elements must be quantified in the monetary terms, that is historical cost as well as current value. This includes fair value, value in use, and the current cost. Selecting of measurement base. The information provided to use by the measurement base must be useful. In other words, it must be relevant and offer a faithful representation of the transaction that have occurred. The characteristics of the asset and the liability, and the ways which are assets and liability for the future cash flow. So presentation and disclosure. So whatever the company they're going to make the relevant data, the fruitful information should be given to the outsiders of the company. They have to give the all the information as a presentation disclosure. The effective presentation and disclosure is a balance between allowing the entities flexibility report relevant information about the company as well as financial performance, position, etc. The finally, thank you. It was good luck.